at the end of the day, Toronto in the next 5 years, 1 million people will move there.
Right. That makes sense. Yeah.
Right. So he goes, they're going to need someplace to live.
Yeah.
You know, and they're not building enough.
Very true. Yeah.
They're not, right? Even with all the densification and everything, they're still not building enough.
Yeah.
Hey everyone, welcome back to the Mark Loeffler Experience. Thanks for joining us again. We got Mayu on. We're going to be talking about finding opportunities in hot markets, finding undervalued in comparison to other properties. We're going to find deals.
Right. Yeah, so pleasure to be here. And the hardest part is obviously like just looking for opportunities and plays. I know you do the same thing as well, right? You're always just trying to stay ahead of the trends, right? So I mean, look, like real estate for me, it's a naturally, I guess, like imperfect market, right? Like you do.
So when did you start investing in real estate?
Okay. I started back in 2015. Very different time.
So right? six years ago. Where did you start investing?
I started it's not what I do now, but I started in pre-con condos. And at that time, I didn't really have money. And I was just looking at the market, and I was looking at Toronto, and I saw detached homes going at like 800K, like something like that back then. I don't remember now. And then I saw condos going at 300. It was a very simple decision. It was like, look, either this condo is undervalued and it's going to go up in value, or these detached are overvalued and they're going to go down. Right, so that was 2015, 2016, and it was also like affordability as well, right? Like if you just look at like how like I couldn't buy a house at that time at like 800K, so I was like, what's the most affordable asset class? To me, it was a condo, right, at 300. So I bought my first pre-con, Yonge and Eglinton, 320K or something like that. It took 5 years to get finished, but that's a whole other problem on its own. Saw the opportunity in the condo market, and I kind of left that, like went in on it. I didn't really have the money. Use line of credits.
You saw because the price per square foot on detached was more than on the price per square foot on the condo market?
You know, 2-bedroom condos at, Warden and like Ellesmere, like that area, like the Vic Park area. I saw those going at like 750, almost like 800. At that point, I think these are like rough numbers. And then I saw condos going at near Fairview Mall, which is a similar area, at like 300, 350. If you're getting a 2-bedroom, you could probably get it under 400. So I was like, 2-bedroom house, 2-bedroom condo, 400 versus 700. Okay, if I was to like buy in this market, I'd have to be like on the condo side, right? So it's just really seeing like where the opportunity is within the Toronto real estate market, right? At that point. And to me, it was on condos. And then we bought some other properties in between. But the next real like play that I made was when condos had skyrocketed to about like $800-900 a square foot. The same area, I bought a detached house for $675 when condos. So that was a two-bedroom detached at $675 in 2018 or something like that. And 2-bedroom condo is going for almost like $550, $570 or something like that. So I was like, well, that doesn't make sense to pay like only $100K more to get like a bungalow, and you can make it into like, you know, non-conforming units and things like that. My entire investing journey has just been like, where are the plays? And like, if you follow Toronto as kind of a center point, you can identify these plays everywhere.
Everybody outside of Toronto will now think you just said that Toronto's the center of the universe. Where's Montreal? Vancouver, Kelowna, and I'm like, okay, guys.
Well, I do sometimes compare Montreal to Toronto, because I'm like, if someone wants a big city in Ontario or in Canada, you know, you've got Vancouver,
Montreal's not in Ontario.
Yeah, I know. Yeah, you know, if people want a big city and they go, Vancouver is way out there in terms of price per square foot and things like that. Toronto's, you know, not really affordable, and then you compare it to Montreal, and I think there are still plays there.
Well, I mean, and that's what happened when like they introduced foreign buyers tax.
Yep.
A lot of people went to Montreal.
Yeah. So it's just staying ahead of the trend, I think, is a way to go on that side. I think even if you look at Ottawa right now, like Ottawa is growing significantly in terms of price.
Well,
everything is.
It's been like nuts in the last year.
Yeah.
Okay, so 2015 you bought pre-con. 2018 you bought a single family. Like, so where are you investing today? Like
So I mean, 2015 I bought a pre-con. We also bought another pre-con out in Newcastle, like way out there. We flipped that, bought a property out in Ajax in between there, and then 2018 is really when I started doing the BRRRR. Right, so that was that bungalow in Scarborough, and that's when like things completely changed. Because up until this point, I was just leveraging, you know, lines of credits, and I was just trying to aggressively pay things down. I discovered the BRRRR. It went decently well on that property out in Scarborough. I pulled out maybe like 75% of my capital, but I was still like, if I'm leaving, because I didn't have that much capital, so I was like, if I'm leaving a crazy amount of capital in each property, I'm gonna run out of capital really quickly, right? Yeah. So I started looking at London at that time. For me, it's always been about cash flow, right? Like that's my goal, is just to, you know, get as much cash flow as possible. At that time, rough numbers now, but I think London was maybe cash flowing on a single family house like $200. And then I went down to Windsor, and I saw that Windsor was cash flowing like 6, 7, like $100 on a single family house. Like we're not talking about anything crazy here.
And that arbitrage or however you want to use it is basically saying, okay, this market, I'm getting okay cash flow, but this market I'm getting much better. And I did that in my investing journey too, way back. I went to Cornwall, Ontario. Like Cornwall was getting like stupid cash flow back in the day when I was investing there, right? So it's like, okay, what's that next town? What's that next city that I can invest in?
Yeah, so to me it was, does Windsor make sense? Like there's obviously a higher risk in Windsor when you compare it to London. If you compare it to Kitchener-Waterloo, like Windsor is obviously a higher risk, but to me is the risk worth an extra $400 to $500 a month, right, in potential cash flow that I was getting? So when I started buying in Windsor, I was getting those returns, and I was like, it's not risk weighted. Like when I risk weighted, I still end up higher in Windsor with the overall portfolio because you only need 3 properties, and then if one tenant doesn't pay rent, you're still fine because you're cash flowing $600 each, right? So I hopped onto the Windsor market and I just went as fast as I could, right? Because you see an arbitrage play or you see an opportunity, and I've seen opportunities before and I just never went that hard into it. So you reap the benefits, but you don't reap it as much as you can. So Windsor saw the opportunity, just went really deep, really fast into it. And then like now I'd say that opportunity window is basically closed, right? Like a single family house is cash flowing at like $300 a month. Obviously London has gone down a little bit as well in terms of cash flow and things like that. But at $300 a month, that risk weighted opportunity is kind of closed down, right? So now I'm buying in New Brunswick. And that was a risk play as well. It was New Brunswick. You don't have Residential Tenancy Act. You don't have landlord tenant board. The landlord has a lot more rights in New Brunswick. So I like that play there. But even there, like I'm looking at Moncton, I'm looking at St. John, right? And so Moncton is boom because every single investor wants a piece of Moncton. Very good like economics, very good like population trends and things like that. They've got a little bit of an older population, but still like very good overall market. A lot of people stay away from St. John's because there's more economic risk. There's like one main employer in that town.
Who's the main employer?
I don't know, like the Irving family, right?
Oh,
so the Irving, yeah. So they're like the main.
Irving shipping, whatever.
Yeah. So they've been there for a long time, but that city also has like very old infrastructure. So when you talk about properties that are perfect to BRRRR, like St. John is. I mean, they've also been like attacked with like ransomware. There's all sorts of issues there. But when I looked at the cash flow potential and the cash flow numbers in St. John versus Moncton, to me, the rate that Moncton was going up, and don't take it wrong, like St. John has gone up, but the cash flow numbers is still like an arbitrage or whatever you call that kind of play there, where St. John, in my opinion, is undervalued, right? So all we're doing is we're looking for undervalued properties.
Yeah, well, I mean, I had Robbie on, Robbie Clark, right, who's like killing Sudbury right now.
Yeah.
And he's basically saying kind of the same thing. And he's like, well, I'm buying stuff at under, like, what I can't build for what I'm buying it at, right?
Yep.
So basically I'm getting the land for free plus a discount on the building.
Yeah.
And yeah, so I mean, that's obviously an arbitrage play too, right?
Yeah.
Like it's like he's found a market that he can buy under construction cost.
Yeah. And that's a big part of it, especially in Ontario. I think our construction cost, permits, development, all that stuff is so like stupidly expensive that was a big part of what I liked about Windsor as well, right? I'm like, it would cost me more than $200,000 to build this house, even if I got the land for free, right? So to me, it was a no-brainer at that time and just jumped into it. Sudbury is also a great market, right? Like I looked at Sudbury probably January of 2020, and that was as Windsor was initially heating up. So I was about to pivot to Sudbury. I think everyone's doing Sudbury now. Like almost
everybody I talked to.
80% of the people that were looking at Windsor have now pivoted to Sudbury, and that opportunity is closing, but still a great market, right?
Yep.
I think, and people are going more and more north. Like if you compare Sudbury to Timmins, which is only I think 2 hours north of Sudbury, Timmins is really dirt cheap. But I mean, there's crime capital and things like that. Is if you Google Timmins, you guys can read a lot about that stuff.
Oh, you go to South Porcupine; it's the oldest population in Canada.
Didn't know that.
which is a suburb of Timmins.
Oh, okay.
Yeah, I know this because I used to sell stuff up there. Way back in the day. And I'm like,
you've been everywhere.
I never went there. So I'm like, where the hell is South Porcupine? And I did my research. I'm like, oh, okay.
I think real estate's it's an interesting industry, right? Like if you compare real estate to stocks, like it just is on a high level. Real estate's a naturally like imperfect market, meaning there is like arbitrage for everyone to play in. We were talking about it a little bit before, right? It's just like you've got your REITs playing in the big like 50 unit plus category or 100 unit plus.
They're even down into the 30 units.
Now? Really?
Yeah, when I put my 30 unit up, I had REIT interest on my 32 units.
Wow, okay, that's really small for a REIT. Like I used to.
It's 100% small. So, I mean, Starlight, they buy portfolios from people or whatever, and they include smaller buildings. So I would follow Daniel Dremmer around and say, hey, what don't you want? Okay.
Yeah.
Take that off you, no problem. Just
no,
right? He'd make some money off it and pass it along to me, and I'd make a hell of a lot more. But I was set up to manage those types of properties and manage the infrastructure. And their machine is so big and so cumbersome that to manage a 9 to 15, 20 unit, it didn't make sense for them. Like they would lose money on it.
Right, and for people like you, managing a single family house, duplex, triplex, like probably doesn't make sense, right? So I think within the market, everyone can kind of carve out a niche. Like flipping's existed for like forever, right? And all flippers do is they play in the arbitrage.
Since there was a land title act.
But you buy under market value properties, and you fix it up and you sell it at market value. You're just playing in the arbitrage. You're playing in the gray or whatever you want to call that.
It's not gray area. It's I said this because I get people who comment and maybe not here so much, but on other social media that investors are the problem, flippers are the problem. And, well, number one, we're providing a service. We're going in, we're buying that house for $500,000, putting $150,000 into it, and then selling it to somebody at say $700,000, $800,000. That person could have done that by themselves, but maybe they didn't have the 20% down on the 500 and then the 150 to go invest, so they didn't have that 250. But on 800, they can go get a CMHC up to whatever value, and then I don't know, maybe put down a lot less money and buy that property turnkey and not have that issue.
And flippers take a crazy amount of risk, right? Like I've just started flipping more recently into 2020, and until that property is sold, and even then, until the cash hits my bank account, like to me, it's always a risk, right? Like the seller could back out. Like you've got I bought a property that had structural issues, which were unexpected, like things like that the average person just doesn't want to deal with, right? So as a service, you're providing people with a turnkey house. I think there's always going to be plays within real estate. Wholesalers are the perfect example of people that play in the arbitrage, right? Like you're getting properties significantly under market value, then you're selling to investors. So even within investing, there's arbitrage. And then the types of assets and things like that as well, right? So I think, for me, my entire journey has just been, where's arbitrage play, or maybe the word's not arbitrage, but where's the play in real estate? Where's the trends going, and just getting ahead of those trends, I think, as well, right?
Well, I mean, Don Campbell would talk about the ripple, right? Yeah. So you drop a stone into a pond, it ripples out. So
very true.
Where's that ripple next?
Yeah, and what's interesting is I've actually told a few people this. A lot of the properties I bought in Windsor that I talked directly to the seller, they were people from BC that had already invested in Windsor well before anyone from Toronto had looked at Windsor, right? Because I think Vancouver and BC, their affordability is maybe even I don't know the exact stack, but it's crazier than Ontario, maybe, right?
Yeah.
So even now when I'm looking at New Brunswick, a lot of the people that I'm talking to have already been investing there from BC. Right, so I think you could almost just follow them and see where Ontario people are going to next, as we have the same problems as BC, right? So going back to your analogy, if you follow Toronto as a ripple within the southern Ontario market, you can kind of see, where the trends are going, right? Where are people buying out and on and out? But I also think as part of that, it happened maybe a few months ago where I think in Pickering, I was looking at townhouses that were going for $900,000 or something like that, right? And then I was just wait, what's going on here? And then I quickly went back and I looked at Scarborough, and I looked at the bungalows. So I'm what are these Scarborough bungalows going for? And they were going for $900, $950, and I'm hold on, this makes no sense, right? So there was a quick play there for someone to act on. I mean, you also, everything else line up cash and stuff like that, cash flows and things like that. But there's always going to be plays just following the ripple and playing that arbitrage.
Well, I mean, I think you watched the video that I did a week ago Monday now, because this is coming out next Friday. Yeah, and you watch that, and that's what I was kind of talking about, is money is starting to flow back into Toronto condos now. And we were talking before, back 3 months ago, and when I put out another video on the Toronto condo market saying now's the time, to basically bottom out here. That was our guest. Yes, and we were off because it actually happened sooner than we thought. And now it's it went up, 10, 15% in a month.
Yeah. And a lot of people were scared to act on it, right? It goes back to the concept of acting when everyone else is scared. And one of my favorite sources, I hop on Red Flag Deals forums, and I just read the threads. I'm what's everyone saying about Toronto? And these are very average people just putting out their opinions, right? And then people that are bullish, I'm kind of okay, if the average Joe is bullish, is this really what I should be doing? And then when people are they were pooping on the condo market really hard, right? All of 2020. And then you can kind of get a vibe for how people are starting to feel differently about condos now as well, just using those sources, right? So the market moves fast, right? People see an opportunity and they will move fast on it. Condos are going up, but I still think they're undervalued relative to detached house prices.
Yeah.
But who knows which one will move, right? Either the condo goes up or the detached goes down. One or two will happen.
We'll see. I mean, and here's the thing. Like, I'm very good friends with like one of the old CMHC economists.
Okay.
And he basically said, I said, well, what's the market going to do? He goes, and he was actually right about like number of transactions in Ontario in general.
Okay.
But he said, listen, at the end of the day, Toronto in the next 5 years, 1 million people will move there.
Right. That makes sense. Yeah.
Right. So he goes, they're going to need someplace to live.
Yeah.
You know, and they're not building enough.
Very true. Yeah.
They're not, right? Even with all the densification and everything, they're still not building enough.
Yeah, and potentially they could close the gap on condos, but you know, it's also about where do you see people wanting to live? What type of housing do you see people wanting to live when you get into like that 5 to 10 year like kind of timeline? Maybe the detached is that much more worthwhile. But I also like I have a decent amount of friends who earn, you know, like 70, 80 grand each, right? And can they afford a $1.5 million house? The reality is just like no, right? And that kind of keeps me up too, because the affordability crisis is something you want to keep in mind, right? Like,
it's always going to be a supply issue.
Supply issue, yeah, but you know, at some point, like if a detached goes for $2 million and a condo is going for like $700K, people will suck it up. That's just the reality of the game, 100%.
Right? They're going to get into the market. They're going to buy into the condo, and then
slowly trade up.
So when I moved into a big detached home in High Park way back when, my neighbors are all like, how? And I'm like, oh, don't worry about it. But like when other people like my age started moving in, they're like, how? And there was always, you know, there was a couple, they each had a condo.
Yeah.
They both sold their condo to buy the detached home, right? So
the concept that people aren't really selling to move up now, right? And part of that problem is on the tax structure, because why sell when you can just refinance, right? And that I think is contributing further to the supply crisis, right? Like people just don't want to sell, and if you don't have to,
I mean, I would always sell my principal because you get tax free.
Yeah.
That's just me. So, all right. So you're arbitraging. You're St. John's, New Brunswick. I'm going to Alberta.
Yeah. I saw that, right? And there must like you can look at Alberta, and I know a few months ago it was kind of on the downward like cycle, and oil prices have recovered and things like that.
The area I'm looking in. So it's fun, right? Because you go over there and look, and there's tons of rentals.
Right.
So like it's still a lot of supply. So like you talk about supply, like they can build really quick out there. That's the one thing that scares me about Alberta is that they can go ahead and they can add a crap ton of units, right?
Yeah.
Because they're much more efficient in that way.
Yeah. No, and you know the tricky part about seeing opportunity is it's not just how is price moving, right? Like okay, my Moncton example, right? Moncton prices went up significantly. There's like small towns surrounding Moncton where prices are still dirt cheap, and you could argue those are undervalued. But then I was looking at one deal in Moncton. I bought an 8plex for $525 or something like that, right? And then this was a 13 unit for $650 in a smaller town. Cash flow is amazing. Everything seems great. You think that property is like undervalued a little bit, and then you start looking at the population trends. And for the last maybe 15 years, that small town has had a negative population trend, right?
Yeah.
So it's not just price that's the only lever that to identify these opportunities. You kind of have to look into what else is happening in those individual cities to like properly assess it, right? And ultimately, you're trying to make an educated decision on which way prices are going to go, and speculation. But if it's educated speculation, I think that's it.
Follow the jobs, right?
Yeah.
Is there going to be job growth there? If there's going to be job growth there, then people will move there, right? Because that's going to put an increase up into wages and
and some people just follow developers, right? Like why are developers going there? Why is Costco going there? Why is Walmart going there? What's going to be happening to that area? So a lot of it, like most of my time, in just trying to find opportunities, just spend researching different like cities, right? So I'll start with what are my cash flow numbers in the city going to be, and then if that meets my initial criteria, then I'll look into the actual city and I'll look into the population trends, demographic, employers, like all that kind of stuff that we always talk about, right?
Yep.
I think there's always going to be plays in real estate. I get that we're in a hot market, but even within a hot market, I think there are plays.
There's always plays. Yeah. Like you can buy a detached home in Toronto and be profitable with it. Like if you buy it right, fix it right, refi it right, like you can still do it. It's just a hell of a lot more work, right?
Yeah, and hell of a lot more capital required.
Well, that's true. Let me ask you this. If you had to start, it's 2015 all over again, what would you do differently now that you didn't do then?
I mean, pre-cons are completely out, right? So for me, that pre-con was great. I closed the price gap closed over time, right? But it took me 5 years to get my capital up. And during those 5 years, all that equity could have done so much more. I mean, I might as well have assigned it, but no one really wants to assign because you're going to take a lower price. So the pre-con strategy is out, but just, knowing what I know today, I don't think I'd be investing in Ontario right now is my honest answer, right? And I think there are plays outside of Ontario, and I think if you're going to be driving, 6 hours to like Timmins or something like that, you could also fly 3 hours somewhere else, right? And you can do a lot of this stuff virtually. So I think there are plays outside of Ontario. I think the Ontario real estate market, it's tough to BRRRR properties in Ontario because you have no idea where
you don't know the end value.
Yeah, exactly. You don't know where ARV is going to be in a couple of months. I talked to someone who bought a property out in Sudbury, and 3 months ago, he messed up. It wasn't a good deal. And then 2-3 months later, all of a sudden the ARV's gone up, and he's like, "Oh, it's gonna be a full BRRRR." Like,
wow, the market's made a lot of people look like geniuses who they deserve to be because they took action. Yet, I forget who wrote that book, but you're going to find out who's swimming naked when the tide goes out, right?
Yep, very true, right? So I just think there's a lot of plays even outside of Ontario that everyone could do, and if you just start like expanding your horizon, I think as real estate investors, you get paid to be versatile, right? Like if you just go, this is my market, I'm just going to keep investing in this one market forever. I think you're going to mess up somewhere along the way. Versus if you stay versatile, you can keep investing and changing your strategy.
Same thing if you're in stocks and like this is the only stock I'm going to invest in. Now then you're going to say the only sector I'm going to invest in, and then you're like, oh right?
It's very true, right? So staying ahead of the trend. I do think like eventually I'll be coming back to Ontario. I just need things to kind of cool down a little bit, right, for me to make like an actual educated decision and not based on speculation, right?
Yeah, I mean, I always say it. I'm like, people are like, oh, you're not going to invest in Hamilton anymore or Ontario. I'm like, no, I'm still looking for deals.
Yeah, I'll come back.
The right deal comes along, I buy it.
Yeah.
Like, it's just I haven't seen that deal
in
the last 6 months.
Yeah, so for a long time I was investing in Windsor. COVID happens, and then I was back in Toronto. I was looking at Scarborough bungalows. I'm like, I gotta get one of these, and I was trying to buy it at 700. Things went as low as like 740, and I was just waiting for like that next like 30K.
Oh, you got greedy.
Yeah, I got greedy.
You got greedy.
That's what happens, but
don't get greedy, right? Because that would have been 200 grand in your pocket already, right? So.
And people ask me all the time, like, oh, like, are you just not gonna buy in Windsor anymore? I'm like, no, like. Everyone moved to Windsor, and I think everyone is now realizing that Windsor is crazy, and a lot of people are moving away from Windsor. And I'm like, I'm about to jump on the opportunity. As soon as enough people move away from it, I'm back in Windsor because I like that city.
Yeah,
I've got my power team already there, so it's very easy.
Well, how many properties are holding out there?
Maybe like 15 or so. But it's a lot of like single family duplexes, triplexes, like that kind of thing. And yeah, like I just don't like having like one property in a random city, right? Yeah. So to me, I've got a significant holding in Windsor and New Brunswick. I'd rather just do those two. And then if I spot another opportunity, just go crazy in that again. I'm
going to fly out to Alberta next week. I'm going out, I'm meeting the lawyers, I'm meeting the property managers, the contractor. Like that's what I'm going to be doing. I'm going to be looking at a crap ton of properties.
But a lot of this stuff could be done virtually, but I think you build better relationships if you get out there, get in person, and meet people.
I need to see properties. Like I'm once I know, like walk that area and check it out. And I'm like, okay, like where are we? Like transportation. Once I have a good idea, like I can go and do that all on Google Maps, but I guess I'm a little old school.
Yeah.
I actually like to get there and be like, okay, oh, look, there's the crackheads. That doesn't show up on Google Maps. Oh, the meth heads over here,
Have you Googled like the methadone clinics in your city, right? And that could give you a pretty good idea, or even the homeless shelters and like where Salvation Army is in your city, right? That gives you a really good idea of the good and bad areas, and no one does it. I don't know why.
Yeah, that's a great idea.
That's what I did for Sarnia. I almost bought a property like a couple blocks from like a methadone clinic, and then I Googled it, and I'm like, oh no, just not dealing with this. A lot of people are going to the U.S., but I think the moment Ontario opportunity pops back up, I'm back in. Like I have no emotional attachment to New Brunswick. Right?
I have no emotional attachment to real estate.
Yeah, that's very true.
It's just an investment vehicle for me to help generate net worth and cash flow at some point. So all right. Well, any final parting shots before we?
Yeah, I think a lot of people are caught up in the hot market right now. I think there's always going to be plays. Like I bought a cottage in an area where I think it was, if you just look at the cottage industry as a whole, I think some areas are undervalued, some areas aren't. It goes back to like everything in real estate, I think there's always plays.
I bought in Kawartha 7 years ago when Muskoka was stupid. Yeah. Muskoka is even stupider, and now Kawartha is stupid too, right? So.
Exactly. So that's a segment of like the cottage industry or like the real estate industry, but I think it's just about going out and like staying versatile and like staying like, I don't know, flexible, I guess is what you'd call
it.
Agile. There you go. That's a word. I should have used that earlier. But I think, anyone that's getting started, just got to be flexible and, don't get too attached to one market and just move around and keep finding that first property or 10th property that you can get into.
Well, thanks for coming, man. We really appreciate it. How do people find you on social media?
Yeah, Instagram is probably the best avenue where I respond to a lot of people, mayu.dava. Also, it's a
We'll link
podcast.
that down below too.
Yeah, also it's a Rise podcast, so feel free to drop into that, and we're gonna have Mark Loeffler.
And you guys are on the
soon.
Rise network too.
Yeah.
You and Austin run that, right?
So, yeah. So we're just trying to provide value wherever we can there, and hopefully we'll have you on the podcast soon, Mark.
All right. Cheers. Let's make it happen.
Cheers.